Okay. The topic of this first Power Hour launch is Attain Freedom, Know Your Numbers. What happens is most people who start businesses just jump right into business and don't really have an idea of what they want this business to be or what they're trying to personally achieve from their business. This session aims to help the small business owner have clarity so that way they can start planning process and developing a business that they actually want to grow and that can actually help them become financially free in the future. So here is the agenda. The presentation will start at 12:06 and then we'll be done at 12:50 for questions and comments. The objective of this session is, 1, to gain laser focus by knowing what you require of your business. 2, jumpstart your business planning process. And 3, create a yardstick in which to measure ideas. Before I start, let me introduce myself. I'm Evelyn. I'm a certified public accountant. When people hear the word CPA, they think taxes and they think bookkeeping, but actually I'm more than that. I'm also a certified valuation analyst, a certified value builder, and also have my MBA. So what does that mean? As you can see, most of my training has been focused on building businesses. That's what I love to do. I have been doing this for over 15 years now, trying to helping small business owners grow their business and helping them make the accounting of their business work so that way they can increase the financial value of their business. I specialize in helping my fellow entrepreneurs with their end game, so I do exit planning. It doesn't matter what your exit plan is. If you want to hire a C-level staff or you want to sell your business, I can help you transition through that process. If you wait till the end to develop an exit plan, you're going to get burnt out, and at that point, it will be too late. So don't wait. This is the time to start thinking about it when you don't need it, because by the time you need it, thinking about it becomes too late. Okay. First of all, to know where you're going, you need to know when you've gotten to where you're going, you need to know where you're going. So how would you define success in your business? What is success? What does it look like to you? If you don't know where you're going, you can't get there. So first of all, the very first thing you need to know before you even start anything is saying, how do I know I have become successful in my business? That's the very first thing any entrepreneur has to think about. They have to know how success is defined. According to Kaplan, a Harvard Business School professor, he says there are 4 perspectives of business you have if they're going to be successful. The first perspective is the financial perspective, which is how do I define financial success? The second perspective is the customer perspective, which is to achieve my vision, how should I appear to my customers? And the third perspective is the internal business process, which is how can I align my internal business process so that way I can better serve my customer and meet my financial goals. And then there's learning and growth. That is, how do I keep on learning and growing so that way I don't exist just today, but in the future. It's not just important for me, but it's important for me, my business, and everybody that works with me to be involved in this learning and growth process. So that way the business exists for years to come. So this session is focused on the financial perspective, developing that number you need for the financial perspective. The worthless business, and the worthless business is a business that has no system. Everything depends on the owner, has no plans for customers, for business growth, for internal process, for revenue. If you have none of this, there's really no point. What you're doing is not useful to anybody. You might have enough income for today, but in the future, when you're not as strong and you can't work as hard, there's no value. As soon as you stop working, the money stops. There's no processes, there's no system, there's no plan. So it's really worthless. In other words, you just basically have a job, just, you name the business. So you need to make sure, do you have a business or do you have a job? If you have a job, then you really can't call it a business. So here's the worthless business. The income, all income depends on the customer. You have the customer income, all processes depends on the owner directly working with the customers. However, worth much more is if you have systems that interact with your customers that make income. That's worth much more because even whether or not you decide to keep it at retirement, you can actually choose to sell this business. The systems you build in your business are the most valuable assets you'll have. You have to build systems. Without systems, you don't have a business. If you don't build systems, you're working in vain. No systems, no financial freedom. So in building systems, you're building assets. Business assets which become a source of future income to you, either through the sale of your business or source of retirement to you. So you need the systems are what you call intangible assets. Every business has a tangible asset and intangible asset. Tangible assets are those things you can touch, like your computer, the equipment, things you can, your desk. Those are tangible assets, and those have value. But what actually, when you sell your business, what actually has the most value is your intangible assets, which are your systems, your internal process, your workforce, all of that stuff build and add value within your business. And that's what you really need to work on to pump up the value of business and also to increase income of your business. So here's what it is. Business income from assets should be a source of your personal income. In a successful business, you should be able to have some kind of personal income from business income. And those personal income should actually be able to be a source of future income. So when you're getting income, you just don't want to get enough income just for today, but you also want to diversify by also investing in other places. And also, there should be this continuous cycle where you're getting income from your business and, investing in other areas too. So the business is an asset class. Normally when you go to a financial planner, a lot of them don't even add your business as an asset class because they don't know how to value it, or they don't even know how it's worth, or they don't even see it. A lot of financial planners have not had a lot of training in the business aspect of things. But however, in your financial freedom plan, your business is your biggest asset, and you should be realized as that. And yes, okay, invest in stock, bonds, whatever you want to do. But however, most of your time should be spent investing in your businesses. When done right, could be a very great source of financial freedom for you. If you look at the wealthiest people in the world, most of them gain their wealth by owning businesses. And when this financial freedom happens, it happens when you have enough income coming in from your assets and do not need to work anymore. And it all starts with knowing what you have and where you want to go. Know your numbers. Now we're going to do a little exercise here about knowing you should have this Excel workbook, which now you can follow me with the Excel workbook, and we're going to work through an example. And here we meet Joe. Joe is the small business owner. He's stressed. He's been trying to jumpstart his business for the last 3 years. Every time he makes progress, he's back to where he started from. But however, now with this workbook, Joe can gain laser focus. It can jumpstart the planning process. And then, by that, he knows how to measure his progress and his yardsticks. Okay. So in this workbook, you'll have, when you open it, first of all, when you open it, you'll see the introduction. Then the Meet Joe is Joester, and then you click on the third tab, the dashboard. This is where you enter information. The yellow cells are the only places you need to enter information. Every other thing is computed for you. So here, in this first cell, you should write the age you would like to be financially independent, which means the age in which you would like your business to be a source of income for you, so you can actually not have to work, not have to do anything anymore. Just your business just becomes your source of financial independence. So go ahead and take a second and fill that box in. And then we go down to the next tab. Write your current age now. And then in the third tab, write how long do you expect to, what your life expectancy is. And then in the fourth tab, write what your expected rate of inflation. The rule of thumb, the one that everybody agrees with, is 3% in the developed world, because that's what the Feds try to keep inflation at 3%, even though historically inflation has actually been much lower. Okay, so once you do that, in this tab, write your expected living expenses when you retire. How much would you need to live happily and successfully? So if it's 20,000, write 20,000. If it's 80,000, write 80,000. Okay, when you compute that amount, it uses the information you collected here to compute what the future value of that is. So here it's 80,000. It's worth 80,000 today, and it's worth 92,741 in the future. So that's what that is. So that's the present value, and that's the future value. To have this kind of income, 80,000, your business will have to have revenues of 440,000. So that's the amount of revenue your business has to have in this tab right here to have if you had 80,000, in this case 80,000, to have 80,000 income, the business has to have 440,000. The future value of that, based on the information entered here, is 510,080. Here we're estimating. You can put if you know your tax rate, you can enter that here in this tab. 35% will be quite high. 39% is the highest tax rate in the U.S. It will be, if you're not sure, you can just 35%. And then here it will tell you what you need. You need $510,081 in business revenue to get the equivalent of 80,000 at 3% inflation rate. And in this case, there was 5 years before retirement or before financial freedom. So that's how much they would need their business to make that's how much they'll need their business to make in 5 years if they're going to retire. So knowing that number, even though that number is just a number, knowing that number allows you to figure out what you're going to do and how you're going to plan things, so that way you can, okay, if let's say you have an idea to start a bakery store. If that bakery store cannot make $510,081 in 5 years, then don't even bother, because now you have a yardstick to measure your ideas. So as you have your ideas, you do quick projections, and you just keep going through the list. Okay, this is not going to work. This is not going to work. This is not going to work, because you need to get to a point where you're focused and you know exactly what you want, so you can get it. Because if you don't know what you want, you're never going to get it. You can't get what you don't know you want. So here, let's see how this is broken out. So the revenue, like we said, we determined here that you need is 440,000. The variable cost, and what variable cost is, it means it's cost that goes to your revenue, is 88,000. And so here you have owner's management salary of 80,000. So I'm just estimating based on percentages. Marketing 44,000. You should always have marketing should be a percentage of your income. The more income you make, the more you should market. And your other fixed expenses at 88,000. These are rough estimates. Your projections obviously will be more accurate depending on what your business is, but I basically have just given you a rough template based on my experience of looking at tons of financial statements and what acceptable percentages are. So your cost, total fixed cost will be 212,000, and your net income will be 140,000. And then you see here this break-even point. That means That's the minimum you have to make from your business to get the 80,000 out. And because in this case we have the $80,000 which we're trying to make. So the 265,000 is the minimum you have to absolutely make, and that 265,000, your net income will be zero. But that's not where you want to be, because there are two phases an entrepreneur goes through. An entrepreneur goes through a wealth creation phase and a wealth preservation phase. In the wealth creation phase, this 80,000 is going to the entrepreneur, the owner. So they're the ones making this money. So then, if your plan is how to scale, that $80,000 in 5 years will not be coming to you, because you'll have to hire somebody to take your place. Because if you've done it right and you've created systems, you should be able to hire someone to come take your place. So that way your income is not coming from top here, but it's actually coming from here. So if you're not making enough, then you still find yourself trapped in your business. You want to make, if your goal is 80,000, this is what you need to make it happen. Because as you grow, you're going to hire people to work your system, and that way there's enough income to go to you, even after you pay your taxes. So let's say you're not going to sell your business, and you want to make 80,000. So in the first 5 years, you pay yourself from the business. After the 5 years is over, then you will pay yourself after the business has done what it has to do. You can call them, depending on your corporate structure, they're called dividends, they're called distributions, but you're not really making your money directly from the business anymore when you retire. So by having your systems in place, by having those 4 processes I talked about, let's look at those 4 processes again. You have your financial system, your internal business process system. You have your learning and growth system and your customer system. Your business should be able to contribute whatever it is that you said your living expenses is for the rest of your life. If all the systems are in place or implemented correctly. And also, another source of income for you, if you did it correctly, when I showed you that graph, where's that graph? Let's quickly here. The diagram I showed you here of business income from asset, personal income, future income. If you did this right, whatever money you're taking out should also be enough for you to invest in other endeavors. You have income from that, but you also be diversified, because you haven't taken money out of your business and invested in other ventures. It might have been real estate, it might have been stocks, it might be bonds, it might have been some other businesses. It doesn't really matter what it is. The point is, by doing it right, by thinking it through, by taking your time to work your numbers, you can retire successfully. But if you don't think it through and you just get up each day and say, whatever happens today happens, I'll take it, then 10 years from now, 20 years from now, 30 years from now, if you're still alive, you find yourself still struggling and still doing the same thing. You don't have to look very far. I do a lot of research online, and as I'm reading through magazines and newspaper, I don't have to look far to see people's woe stories about, wow, I'm 67 years old and I can't retire. I'm 69 and I can't retire. If you go to Walmart, you find the greeters. They can barely even scan, but they got to keep working because they don't have enough saved. They have not planned. And a business is such a great way to make that happen. Because a business, you have control, and you can actually, plan well, can be a great, the kind of returns you get from a business, you can't get that from stocks or bonds. They're more stable, and it's more predictable, and it's more stable than the stock and the bond market. Because basically what you do in the stock market is you're investing in other businesses just at a very, very small amount. And you don't even invest enough to really make a significant difference. But imagine if you just invest in your own stocks rather than the stock market. Imagine how much more returns you can get. So these are things you might want to start thinking about, is how to use your business to create the kind of future you want. Because without that clarity, then you don't really know what it is you're doing. And then here, so here, let me just quickly show you Joe's conclusion. Now that Joe had done this valuation right here, he knows exactly what he needs to do. Joe can begin to start thinking about business ideas that will meet those goals. If his business cannot scale to the point where he can meet his goal of $80,000 a month, then Joe needs to think of something else. Because if he's constantly investing his time in something that cannot provide him any source of financial freedom, well, I hate to tell Joe, he's wasting his time. It's not worth anything. It's not worth anything to him in the future when he cannot work as hard. He needs to invest in time in something that will actually provide him some source of financial freedom. So now let's go back to the PowerPoint here. So now that you know your numbers, you can begin brainstorming. You'll begin to realize what you were doing will not cut it, or maybe what you're doing is working, But if you need to think bigger, the place to know it is by knowing what your numbers are. If you don't know what the numbers are or what the numbers need to be, you can think bigger. Let's go back to that. I'm going to keep going back to this 4 perspectives of a business because it's so important you understand this. Financial. You have to know how you define financial success. If you don't know how to define financial success, you will never know when you get there. So financial success, once you know that, you can begin to say, okay, well, how can I serve my clients? How can I serve my customers? How can I do this? How can I achieve my vision? And how should I make that appear to my customers? How can I satisfy my shareholders, and how can I improve my business processes? What learning and growth initiatives should I take care of? Should I participate in? Because with vision and strategy, it becomes clear to you. So because as you become successful and as you start business, there are going to be so many people with so many ideas telling you, why don't you try this? Why don't you do this? Hey, come partner with me. Come do this. Come do that. But without vision, strategy, or plan, you'll do every and anything, and you'll be stressed and you'll be tired. But with focus, you can say no. You can say, you know what? I'm not doing that because I have a plan, I have a strategy, and I can't see how you can help me. Good luck to you. And then when you find out something that merges with you, you're like, this is great. Come on, let's sit down. Let's talk about this. Because you're focused and you know where you're going. But without that, anything, is suiting to you. All right, let's go back to where we stopped. So think bigger. Okay, let's also not forget that taxes have a big effect on our plan. Now, this discussion will not be complete without me talking about how taxes actually help or defer you from the plan. So if we go back to this workbook here, we see Joe's tax rate 5%, and this is just an estimate. With this kind of income, Joe's tax rate will probably be about 20%. So we see how that tax, he has to pay $28,000 in taxes, and then he's left $112,000. It's still enough to meet his $80,000 needs, but it's, if he had planned better, his tax rate could have been 15% or even 10%. But without planning, then he's paying more. So just take a look at if his tax rate was 10%. He only paid $14,000. That's half. So, and how are some ways that Joe can start planning about his taxes and how to retain more in his business so he's not paying as much more in taxes? Well, there are things he can do. And for one, choosing the right corporate structure that matches his business. That's important. Having an accountability plan, formalizing the business reimbursement process, because it's not just enough to deduct money. If the IRS comes to audit you, you need to show documentation, because if you can't, they're going to be like, okay, we're not going to accept that write-off. So you need to, part of preparation is like saying, I need to be ready. If the IRS comes to my door, I'm ready to talk to them. I'm not hiding anything. You want to do everything legally. You want to do everything right. So that way there's nothing hunting you down. So, you have to formalize the process, pay yourself a salary. That's another way to reduce taxes. And also all this depends on your structure. Declaring dividends depends on your structure, closing your books, and then accrual basis versus cash-based accounting. With accrual basis accounting, what happens is you can actually, claim some expenses earlier, even though you haven't paid the cash. And accrual-based accounting is a great way to control the amount of taxes you pay because you can plan better. With cash basis, you don't have as much. You can't really plan as well because you basically have to recognize everything when the cash comes in and when the cash goes out. But if you're a accrual basis taxpayer, you can actually plan your taxes and your income, inflow and outflow better. So that way you minimize your taxes based on how much you're going to make that year. So let's take a look here again, how the tax. So here he had a 10% tax rate. So if let's say Joe had an accountable reimbursement plan, he will have a salary of $80,000, and he will have other expenses like when he does mileage and everything that's reimbursed from his business. If he has a home office, all that's reimbursed from his business. So in a kind of way, part of his living expenses are being paid by the business because he's writing them off. And that's the great part about having a business is some, what the average person who doesn't have a business can't claim on their taxes. The business owner can actually claim it if they do it right, but those have to be planned in advance. Because if you just decide at the time of taxes that, hey, this is what I'm going to do, it might be too late because it's a process you have to follow. So those are things you actually have to think about too, is tax consequences and how that's going to affect your taxes. And also, I want to point out something here too, that this plan right here makes the assumption that Joe wants to keep his business as part of his retirement plan. However, Joe might decide, I want to retire, I don't want to deal with it anymore, I want to sell my business, and that's fine too. But however, there's a different planning process he will need to go through to figure that out, because when you're selling your business, he'll have to, first of all, his business will have to be a little bit bigger just to get as much money out. And that's because he has to, all the cash he needs, he has to get from the sale of his business, versus if he keeps his business, let's say his business gives him $80,000 every year. However, if he sells his business, he has to find a way where he can invest the cash to get the same $80,000 every year. So, and there are not a lot of investments that will pay you as much as a business will be. So when you sell your business, you're losing that income, and you probably are not going to get as much cash to invest to give you the same amount of income you need. So which means you have to build your business a whole lot bigger to get the same effect. So that's something you need to keep in mind. So here, we're almost done here. So now that you've started thinking about this, I'm going to answer questions, and but you might want the next workshop. I'm going to start thinking about possible ways to meet your financial freedom goals through your business. So I'm going to go more in depth about things you begin to think about, and ways that you can begin to think about meeting your financial goals, and just developing your yardstick so that better know where you're going, what you want to do, and then you can start developing a plan of how to get there. Thank you for attending, and the next last minutes will be used to answer questions. I will stop recording now, and all right, hope to see you at the next workshop.